Robinhood is firing 25% of its staff. What does this mean for Robinhood? What does it mean for you? Robinhood, if you don't know, is a commission-free stocks and crypto investing app and service that allows you to invest money into stocks, fractional shares, or full shares, or invest money in crypto and make some money. Right? It's pretty good. I love Robinhood. As you know, I'm big on investing, but we're going to talk about what this means potentially. We're going to look into the article, and we're going to talk about what would happen if Robinhood was to go bust. Would you lose your stocks and shares? Would you lose your crypto investments? We're going to get into it right after the intro. But first, smash a like, hit subscribe, and click the bell icon. I'm Blaze 2K. Let's get into it. So guys, if you want to get signed up to Robinhood, please use my link, blaze2k.com/Robinhood to get your own free stock. You get a free stock if you sign up using my link, and I get a free stock. It's a win-win for both of us. So get signed up to Robinhood, get your free stock at blaze2k.com/Robinhood. I love Robinhood, guys. I really do. It's a great platform if you're thinking about the future, investing, and making some money. Anyways, guys, back to the video. So guys, as you can see here from the article on The Verge, Robinhood is firing nearly a quarter of its staff, which is insane. Following a 9% cut in April, so they already cut 9%. They're cutting another quarter of their staff. Now, I don't understand why Robinhood gets a lot of bad press and why they seem to be having all these issues. Robinhood is one of the most accessible stockbrokers that you can get yourself into. I mean, you literally just sign up. You put in some details to verify who you are to make sure you're not up to anything nefarious. And then boom, you can start investing money into the app and buy stocks. Apple, Tesla, Microsoft, you name it, right? And even buy crypto now. They've opened up and they're allowing you to invest in crypto, like I think Dogecoin potentially. I think they do allow Dogecoin investments. Bitcoin, Ethereum, you name it, they allow it. And it's just a really accessible way for everyone to get access to stocks, stocks and shares. So, anyways, Robinhood is letting go of nearly a quarter of its staff. CEO Vlad Tenev said in a message posted on the company's blog, "As part of the broader company reorganization into general manager structure, I announced that we are reducing our headcount by approximately 23%." Tenev wrote. While employees from all functions will be impacted, the changes are particularly concentrated on our operations, marketing, and program management functions. Now, Robinhood Chief Product Officer Aparna Chana Pragada is also stepping down from her post as part of the restructuring. So the CPO is stepping down. I wonder why. According to a filing with the Securities and Exchange Commission, though she'll remain employed in an advisory role to the CEO or his designee through January 2023. And Chena Pragada joined the company from Google in March 2021. Now, the announcements came as Robinhood released its Q2 2022 earnings information a day earlier than scheduled, reporting a total revenue of $318 million over the 3 months, which is 44% lower than the same period in 2021. Now, that's a pretty big drop in revenue in a year, right? I mean, I can understand though, the stock market has been plummeting the past year. Crypto, stocks, it's just been a bear market for the past year, and a lot of people have lost a lot of money in it. I mean, stocks are down as much as like 70, 80, 90% from their all-time highs last year. So it's only understandable that people aren't funneling money into stocks and shares right now. Although you should be. If you're a smart investor, you should see this as an opportunity to make some money, because the market always goes up and down, up and down. In times like this, you're wanting to maybe invest a little bit more than you would otherwise, because, everything's, the way I look at it, everything's on sale right now. All the big stocks, all the big share, cryptos are on sale right now. It's a big sale. So, I'm investing a little bit more than I usually would during this period. That way, when it does start to climb back up again, which already is showing signs that it is, you're going to be in for a little windfall, which should be nice. But don't take it. I'm not giving you financial advice or investing advice. I'm just saying what I would do. But yeah, stocks go up and down. It's been a pretty bad year in the stock market, but I think it's going to turn around. It always does, right? We're coming up to a recession, inflation's at an all-time high. Things are looking pretty bad, but I think we're close to the bottom when it comes to investing in stocks and cryptos. And I think, it will. I don't think it can get too much worse than it is right now. Not to say that it can't, but like, my investing advice, or my advice for anybody that's interested in investing, is maybe just to invest on a consistent basis, right? Invest $50 a week and put it into like the Vanguard S&P 500 that has a portfolio of like 500 of the best companies in the US. So you might be wondering what the S&P 500 is, or specifically the one I used, Vanguard S&P 500. Well, basically it's an index fund that is a managed portfolio of about 500 of the most successful companies in the United States across a bunch of different sectors: healthcare, technology, you name it, industry. And basically, when you buy one share of the Vanguard S&P 500, which can be around, I think it's like 300 and something bucks, you're getting a small slice of 500 of the most successful companies. So if there's a market crash where, let's say you buy a share in one company, like let's say Tesla, and the market crashes like 70%, you lose 70% of your money, right? Your investment. Whereas if you invest in something like the S&P 500, if the S&P 500 is made up of 500 different companies. Now, not all 500 companies are going to crash 70%. Some of them are actually going to go up. Other companies, like say tech companies, are down 70%. So it mitigates your loss, and basically your portfolio in the S&P 500 isn't going to crash down 70%. It's going to go down maybe like 10% at worst, or 5%, because the profitable companies in the S&P 500 are going to drag your money up, and the failing companies are going to drag it down. So it's going to find an equilibrium in the middle, and you're never going to lose too much money, and you're never going to make too much money either. Like let's say if one company, Tesla, goes up like 100% in a day, and you have a share in the S&P 500, which includes a fractional share of Tesla. Your S&P 500 investment isn't going to go up 100% in a day. It's that Tesla going up 100% in a day is going to drag the S&P 500 up a little bit, but you're going to get, at the end of the day, if you invest in an index fund, you're going to get consistent profits over time. You're not going to get heavy losses, you're not going to get heavy profits, but you're going to get consistent profit. And I think the average for the S&P 500 is about 20% or so, 20-30% a year on average, which is actually pretty good. If you invest $1,000 in the S&P 500, Vanguard S&P 500, and you have a average year, you're looking at 1,300 at the end of the year. That's $300 a year, over what you'd usually have, right? That's more than any savings account that you could probably find in the US today. So that's pretty good. So that's the S&P 500, or Vanguard S&P 500, an index fund on Robinhood that you can invest in. So yeah, Robinhood is laying off about 25% of its staff, which is a little bit concerning if you have money in Robinhood. And I just want to talk about like what happens if Robinhood were to go down. If Robinhood does go down, I wouldn't concern yourself too much unless you have over about $500,000 worth of investments. And why? I'm going to get into that right now. So let's take a look at the article. What would happen? This comes from Retirepedia, and I thought there was a good explanation as to what would happen if something did happen to Robinhood. Now, what happens to Robinhood what happens if Robinhood goes out of business? Robinhood launched in March 2015 and revolutionized stock trading for the little guys by offering trades with zero fees, allowing the purchase of tiny fractional shares and bundling everything into a sleek mobile app. Now, that's one thing that's kind of new in the past couple of years, is that investing has become more accessible to people. You're able to invest money or buy stocks without paying a fee. Now, before Robinhood and before a lot of these newer stock investing apps came around, you did have to pay a small fee to the broker when you were buying stocks and shares, right? You'd have to, if you were buying one share of Tesla, let's say it was $500, you'd have to pay a small, like a percentage on top of that as your fee to the broker. Well, Robinhood eliminated fees, which is kind of awesome, because all the money you're investing in your stock goes into your stock. You're not paying any extra for fees or middlemen or nothing like that, which is pretty cool. But anyways, yeah, back to the article. Now, it has 31 million users today, holds a large share of the little guy trading market. Given the company's rapid growth and some bad news received in 2021, it's reasonable to wonder what would happen if Robinhood suddenly went out of business, and this article will discuss the worst case scenario. Now, all good things eventually come to an end, and very few companies stand the test of time. The most likely scenario is that Robinhood simply gets swallowed up by one of the large trading companies that it currently is competing with. A potential future organized merger between Robinhood and a competitor is nothing to lose sleep over. But what is of more concern is what happens if Robinhood suddenly shuts down overnight, as happened in September 2008 with Washington Mutual and Lehman Brothers. Do I lose my stocks if Robinhood suddenly shuts down? So I'm going to just give you the TLDR. No, you don't lose your stocks. You're fine. As long as you have under $500,000, you should be protected, because Robinhood is part of something called the U.S. Securities Investor Protection Corporation, SPIC, which protects brokerage accounts similar to the way FDIC protects bank accounts. So just as, if you have money in your bank, typically it's protected, you will be reimbursed. If that bank does go out of business, your money should be protected to a certain level at least. Now, SPIC guarantees the safety of up to $500,000 in stocks. Now, I don't know what that means in terms of crypto, but I do know if you do own stocks in Robinhood, you should be fine. Now, should Robinhood suddenly collapse, SPIC would protect your assets and also help find a new company to take over Robinhood's accounts. It's estimated that your stock portfolio would be back up and running within a few weeks. So yeah, are your stocks safe from Robinhood? Yes, the SPIC insures up to $500,000 of your stocks and would quickly reimburse you if a broker like Robinhood suddenly failed. And if you do own over $500,000 in stocks, you would want to share. You would want to split your investments over different brokers. Now, if you do have a lot of money in Robinhood, more than 500k, Robinhood, I believe, does allow you to transfer some of your investments in your portfolio over to a different broker. So yeah, don't worry. If Robinhood does go down, it's fine. Your money should be safe as long as you have under 500,000 on Robinhood. And yeah, that's pretty much pretty much the TLDR, basically, here. Now, back to the article in question, the one talking about the layoffs. Robinhood said it planned to cut 9% of its full-time staff, but this did not go far enough. Tenev said the company had staffed up, assuming that the increased trading after things like the GameStop phenomenon and bullish crypto markets would carry into 2022. But it's run into headwinds of inflation and the so-called crypto winter that are affecting other companies. Those who are affected by the cuts will be able to stay at Robinhood through October 1st, either regular pay and benefits alongside a severance package. Many companies have had to lay off or cut employees in recent weeks. Tesla laid off nearly 200 autopilot employees, while Shopify laid off 10% of its workforce. So yeah, there we go. So not to worry. I mean, a lot of companies are dealing with inflation right now with, less consumer demand, especially in the stock market, right? Because, like I said, the stock market's been going down and down and down, same with crypto, and people are hesitant to put their money in a sinking ship, right? So I wouldn't worry too much about it. Your stock should be safe if you do invest in Robinhood. And if you don't invest in Robinhood, then you definitely should by going to blaze2k.com/Robinhood. And I believe you get some little goodies if you do. So if you use my link, sign up to Robinhood, I do believe you get some little benefits potentially. You might. Oh yeah. So I think you get a free. I think you get a free share. If you sign up using blaze2k.com/Robinhood. So go do it. If you're not investing in stocks, do it now. It's a sale. Everything's like 50, 60, 70% off. Go get some investing in, and when we get back into that bull market, then things should come up, and so should your investments. But don't take it from me. I'm not a financial advisor or anything. Disclaimer. I'm just talking about money and investing. Anyways, guys, have a good day. I know this is different from my typical videos, but I just wanted to put that out there. Anyways, guys, have a good day. Love you. I'm Blaze2k. Please like, subscribe, click the bell icon, and I'll see you in the next video.